Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our weekly stock market analysis for the week of October the 13th, 2019. This week, all U.S. markets increased on optimism that a U.S.-China trade deal would be completed as representatives met Thursday and Friday of this week to discuss items of contention face-to-face in Washington, D.C. Presidential tweets continue to drive market swings both upward and downwards during the week, causing significant market volatility and unpredictability, thus causing most traders and longer-term investors frustrations throughout the week. Investors did cheer a partial trade deal with China, but soon realized that there was no clear timeline for removing the tariffs, so all of the gains that we saw on Friday were quickly returned. As rumors circulated the deal would not be completed, the markets gave back most of their gains for the week in late-date selling on Friday. Positive comments on the Brexit deal direction increased optimism as a potential deal ahead of the October 31st deadline. However, despite the uncertainty, all major indexes inched out gains for the week. The S&P gained to the end of the week higher by 0.96%, while the Nasdaq outperformed, rising to 1.5% for the week, and small caps on the Russell had an equal showing positively as the Russell ended 0.97% for the week. So we'll jump right into this week's update, and as always, we will start off with the S&P 500. As stated, this week on the S&P 500 and majority of our U.S. indices did see a lot of volatility. The S&P itself saw a pretty significant range, high to low, of just a little bit over 10 points of this past week. Pretty aggressive trading in both directions as the market was clearly anticipating a larger impact to the trade conversations both Thursday and Friday in DC between China and the US. We did see a nice little touch and kind of close above the trend line that we have established over the last few weeks or so. And we do want to call this out as a potential bullish signal for us. As we did communicate last week, we would be bullish above 295, and we did clear that. However, we did see in reverse from a bearish perspective a close below our shorter term trend line that we did see over the last 3 weeks or so. And additionally, we did see a opportunity for the bears to step in as we did not close above or even touch above our weekly high from the previous week. So this does indicate some indecision as well as a clear communication from the market that the overall market is not happy with at least the first phase of the conversations that we have seen coming out of DC with China in regards to overall tariffs. So we do anticipate some type of bearish to sideways skew moving forward for next week. However, anything could change as tweets come out of the White House in regards to direction or lack thereof direction for overall trade deals. So we'll continue to watch that and make sure that we are being very agile going into the week, as the market is extremely sensitive to communication that's coming out of the White House. So we do see some convergence of overall price, and we do see some opportunities for us to kind of take advantage of this sideways action. And we do see that price will continue to be compressed going into the next week or so, as we do see some large banks starting off with their earnings reports over the next few days or so. And definitely as we look on to the NASDAQ, we do see an opportunity there for some continued directional movement as some heavyweight tech companies report earnings coming into the mid part of the week, specifically Netflix and IBM. So we'll jump over to the NASDAQ. Again, we'll still continue on with our weekly look. The NASDAQ continued to press hard, very, very bullish, as we did see about a 1.5% increase and just short of 1.3% just on Friday alone, coming up just above 2.4 points. So pretty aggressive buying that we have seen in the NASDAQ, and that does indicate in opposition to what we do see in the S&P, kind of this movement where we do see a push up, a pull back, and then potentially a movement upward. Now we do see an opportunity for some resistance that we do call out in this red horizontal line, roughly about $192, 191.80. as an opportunity that we will look if the bulls can push us over this dollar amount for price going into next week, and there's a high probability that will happen given the opportunity for Netflix. We do anticipate coming into Thursday's session pretty bullish if there are positive results from some of these key tech names to push us over our value area high, which came in this week at 193, up pretty significantly from where we were last week. So we do see an opportunity for us to touch this longer term trend line and potentially move on upward to all-time highs given some positive results. So pretty consistent across the board from a NASDAQ perspective that we have seen some higher highs over the last week and a potential breakout. And we do see this as an opportunity for us to kind of watch this trend line here as some type of resistance. But if we do break through this earlier in the week and do see some continuation, we do feel that we will break to all-time highs on the NASDAQ. Now, in correlation, we'll take a look at the Russell, which did see a little bit of pullback from a bullish perspective as well, but we do want to continue to watch what is taking place there, as we did see and call out very specifically a potential short opportunity as the Russell did hit its 20-period EMA average, as well as coinciding with a lower volume area here. So we did see a nice pullback that we do anticipate some potential follow through from a bearish perspective to come back and retest. Now, we did see an inside day, as we do call out in the blog. And if you haven't followed our blog, please do take an opportunity to subscribe at Carl A. Smith Holdings/blog, where we do provide market commentary every week, as well as a number of key insights throughout the week. So we do see an inside week, as we call out here, these trend lines where price did not break out of range from its previous week, which does indicate some indecision, but also some convergence of price. So we do see an opportunity when there are some major news, and primarily it will be associated with the tariff decisions, as the Russell is made up of all US-based companies. We do see some reaction that potentially could bring us either down below to retest some of these lower volume areas, or moving straight upward to kind of touch. And we'll zoom here just a little bit to kind of showcase exactly what we're talking about, where there is some opportunity for some additional resistance for price in two levels here. But conversely, we do see, if the information is coming out negative, coming back and retesting this trend line here first, and then potentially, depending on the magnitude, coming back into the $145 level for some additional support for a reversal, which does coincide with our longer term kind of box that we've been in regards to price over the last few weeks. So it is an opportunity for us to kind of watch this, and we'll take a look to see what's happening. But any type of decision that we do see coming out of DC will impact the Russell. But if all things are held equal, we will see some continuation of our trading range that we've seen pretty much all of 2019, this oscillation of price both upward and downward. Now, if we do see some bearish continuation, which we do somewhat anticipate, roughly about a 60% probability that we'll see some bearish continuation downward, we do see an opportunity for us to continue in on our short and keep it until we hit value area low, which is coming in roughly about $147. So this week upcoming is going to be a very important week, not only as we kick off with some major names from a earnings perspective, but there are some key eyes that are both watching both domestic activity as well as some macroeconomic impacts that we do see from a tariff perspective, as we also see some impact coming out of the UK from a Brexit perspective. So as we move into our official fall months, we do anticipate some type of bearish activity. October is traditionally a very volatile month, and we have seen that just in the first 2 weeks of trading for this October. So as always, please don't hesitate to provide some feedback. Don't hesitate to subscribe and provide some feedback. We definitely are very interested to see if we're meeting your needs. And with always, it's your money and it's under your control. Take care.